please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back to the show. Well, for now, if you're wondering what's been happening in the markets, it's been a good day so far. Up almost about 0.5% for the Sensex and the Nifty, and Good Friday for the mid-cap index as well. But can't say the same.
Market is also doing push-ups like Narendra Modi and Rajyavardhan Rathore. It's pushing up.
Yeah. Okay, well, the fitness challenge, right, that everyone's been talking about. But moving on, the Kaveri Seeds stock is marginally lower this morning. Along expected lines, the company has posted an EBITDA loss in a seasonally weak quarter, though the high-value product mix has helped their top line. See, Mithun Chand, the Executive Director of Kaveri Seeds, joins in now to talk about that. Mr. Chand, good morning. If you can just tell us what FY19 looks like. It's not been a great year for you, FY18, but do you foresee any pressures next year?
Good morning. First of all, I just need to correct. We had a good year in 18 compared to 17. We have grown by more than 15%, and the margins, the profitability was better than previous year.
No, my colleague meant the fourth quarter. My colleague meant the fourth quarter, Mr. Chand.
Fourth quarter is a lean quarter. Even in fourth quarter, we are done well when compared to last year. There were a lot of write-offs in last year, and we have controlled our write-off this year. So being the other expenses and the employee cost higher, so the fourth quarter was lean. But going forward, when you see the next season, the monsoon being early, and we see a good growth in non-cotton crops, especially in maize in the coming years. So it's a very positive sign for the company. And even in cotton, there may be a slightly decline in the acreages, but in terms of the company perspective, we will be up in terms of the market shares. We are growing in central and northern India, and will maintain our market shares in the southern region. So overall, it looks like a good season for us, and more specifically, it will be a very good season for us in the non-cotton crops, which is a high profitable crop when compared to cotton.
Oh, I see. When can you put some numbers to the kind of revenues you think you can make? Has selling already started April, May, or does it take up until June, July for the sales to start?
A small portion has started in the western India, especially in Gujarat, but majority of the sale will come in June and July quarter, because that's being the main rainy season. So most of the season will come in the June quarter.
Okay.
And some will be slipped over to the July quarter.
Okay. The Pabrai Fund has bought into your company. Now that's Monish Pabrai, obviously a high-profile investor. Are there any other big investors or funds that have shown interest?
Yeah, well, from day one in Kaveri, we are a very good institutional investors, especially most of the domestic and the FIs, both are present in the company. We have domestic investors like Birla, HDFC and ICICI, and foreign FIs like Flowering Tree, Oppenheimer, and there are many investors.
Will you be raising capital?
Holding in our company. No, actually we are a cash surplus company. In fact, if you see a company, we have done a buyback last year of 200 crores, and over and above buyback, we are given a dividend of 3 rupees per share last year. And if you see now in yesterday's board meeting, we are again doing a buyback of other 200 crores. We are a cash-rich company, and we are distributing whatever we earned in the previous years, and based on the requirements, we will be continuing the same in the future years as well.
Okay, you did mention to us the last time
I think we have done a back-to-back.
Sure.
Sorry.
Sure. You did mention to us the last time we spoke that exports were a bit under pressure. Does that pressure persist, and what is the outlook for the export business?
If you see the overall contribution of export business to a company is less than 5%, so it should not be. It should not make much difference, but last year we had declined by a few percentage, say around 8 to 10%, but that should not make much difference. But if you see the other way, we are increasing our sales in vegetables and non-cotton crops. And moreover, if you see in the company in the last 7 to 8 years, most of the revenues were dominated by cotton.
Yes.
And I think last year was the last year where we see a cotton domination. From the year coming forward, that is especially from 18-19, we see non-cotton crops contribution more in terms of the growth and in terms of the profitability.
But yeah, that's good to
so
hear.
We are more focused on non-cotton crops.
No, I take your point, Mithun, but cotton still is what, 15.5%. Even assuming it goes to 12%, say, this year, is it going to be a bad year again for cotton? I mean, what was that, pink bollworm and, you know, lower acreage? There are all kinds of problems with cottonseed, isn't it? So do you think that can be a bit of a drag, bringing down your overall revenues?
So, in fact, I'll just correct, our total contribution of cotton is more than 55%, not 12.5%.
Okay.
It will be slightly lower than that, but pink bollworm was there even last year. But I think the pink bollworm pressure will be a bit lower because the farmers are aware that the pink bollworm is affecting the crop and they are taking proactive steps. For example, when you see in Gujarat, it started 2 years back. But in Gujarat last year it was controlled because the farmers have taken very proactive steps and they have done enough spraying to control pink bollworm. So I think that will continue in central and southern India. As a company, we are also educating farmers to control and take preventive measures to control pink bollworm. So I think that is a problem, but I think it can be overcome. And overall, if you see, cotton looks, even now cotton looks remunerative to the farmer. I don't see much pressure in cotton acreages. But other crops are also doing well. There will be slight sideways of 5 to 10% in terms of the acreages, but overall it looks good.
The push-up in the market is continuing, and the Sensex and the Nifty continue with their 0.5% gains. It's almost a parallel line. They've not really lost much after the first 15 minutes of rally that they saw, and the mid-caps actually have built on strength. It's a trending up, almost a trending up market as far as the mid-cap index is concerned. Nifty Bank as well doing reasonably well. The advanced declines are 2 in the green for 1 in the red. So market in a very fine spot at this juncture. And now in the last few minutes, the metal stocks have taken up leadership. Until now, you had the IT stocks. Now, metal stocks also moving in. Tata Steel, Hindalco among the big gainers. Of course, Vedanta is unable to participate. Let's get more global views. Uday Mukherjee caught up with Robert Buckland of the Citigroup as part of the special series that he has been doing for us, London Eye. Uday began by asking Robert why he's underweight on India when he's overweight on other emerging markets.
The main issue that my EM strategy colleague Marcus Roskin would highlight, he's a bit of a value guy and he always thinks that India just looks a little bit expensive. You know, we've got an asset class that we want to buy because it trades on a relatively cheap multiple, 13, 14, 15 times, which is what emerging markets do. But I'm afraid India trades on 19 times earnings. So it's a bit more of a valuation call. We like India, we just think a lot of it's in the price.
Any thoughts on politics in India? Because we're heading to a big election cycle next year. Is that part of your
Not
judgment?
really, no. I mean, I think our call on India is very much yeah, as I said, good stock market, but it's in the price.
What is the US bond deal telling you now? Because that's become the focus of a lot of attention.
Yeah.
And some even go to the extent of saying that the next big risk for global markets is actually the US corporate bond market. Do you agree with that assessment?
Yeah, I mean, it's a big number. US Treasuries have just hit 3%.
Yeah.
I mean, I think we should take a little bit of a step back and think, well, if you told me that we'd all be worrying about US Treasuries hitting 3% 10 years ago when they were 7% or whatever. So let's take, I mean, 3% is a very, very low number. Let's not lose that perspective. But you're right. I mean, if you're a bond trader and you bought at 1.6, which is the low they got to, and they're now at 3, you've lost a lot of money. So I think in the bond trading world, yields going up to 3 is a big deal. Of course it is. But I think in the real world, 3% interest rates are still pretty low. So we think that, in the work that we've done, we think that equity markets can absorb bond yields up to about 3.5, 3.7 before they really start to come under pressure. So I think we're able to accommodate that, and it will cause disruption, bond yields rising as we're seeing at the moment. That's one of the factors behind the extra volatility that we're seeing. But I don't see it killing this, where are we, 9-year bull market. I don't see it doing that. So I think it's tricky for us to digest, but we will digest it.
Okay. What about the counter view that while everybody is stressing about bond yields going up and inflation coming back harder than people expect, actually it's growth which disappoints, and we get a growth scare which kills this bull market, not inflation? What probability would you assign to that?
I think that's a really good point. I would be much more worried if bond yields in the US went to 2.5, because we were worried about growth and we suddenly thought, wow, they're not going to tighten policy, they're going to keep policy really loose, than if bond yields went to 3.4. So I think that's a very good point. Equities in the end are more of an option on growth than they are on interest rates.
Now, what do you tell your clients who are sitting in the US and saying, what do we do with emerging markets right now? How difficult is it to convince somebody in the US today that he should leave the safe harbor of growth in his own country to actually look at something like emerging markets?
Yeah, I mean, that's a tough sell. The kind of the monster of this bull market has been the S&P, particularly to US-based investors. It's just kind of crushed every contrarian call that anyone has wanted to throw at it. One of the good things about last year is that EM kept up with the S&P, if anything, outperformed it a little bit. One of the things that helped there is that the dollar was weak last year, and there's a close relationship between the performance of emerging markets and the dollar. So weak dollar, good emerging markets. And I'm afraid one of the things that's changed this year is that the markets are now starting to think about a stronger dollar again. And so I'm afraid the S&P just carries on powering on, and EM are struggling now to keep up with it. The general pitch I use, and we are overweight EM, the general pitch I use to clients is that they look relatively cheap compared to the S&P, so trading on whatever 10–20% discount relative to the level of the S&P valuations in the S&P. So it's a value trade, but it does need the dollar to be weak to really work.
Do you have a call on the dollar? Do you believe that it might actually strengthen, putting pressure on EMs?
Yeah, our view on the dollar is that this current rally that you're seeing will peter out. There was a similar rally in September, October, when I was getting asked all the same sorts of questions about, dollar strength. Does that turn your strategy around? You're overweight EM. That's the wrong thing to do when the dollar is strong. At the moment, the dollar's rallying because people think that the US economy is outperforming the rest of the world, and therefore the US will tighten more than the rest of the world. That's kind of the reason why the dollar's rallying. However, we think that the twin deficits that are now being built up in the US, enormous unfunded tax cuts that need to be financed from overseas capital markets and so on, we think they will prove a drag on the dollar later in the year. So we think that the dollar strength that we're seeing at the moment will peter out. That should help EM to get back on their feet relative to, say, the S&P.
Okay, well, that's a slightly macro view, but on the micro front, the markets are still looking pretty good. United Breweries is your stock of the moment. By the way, you can watch that interview at 8:30 p.m. as you just saw on your screen. United Breweries now up almost 7%, so that really is the stock that you need to focus on right now. Big moves coming in even on the volume front, and many stocks for company: Radico Khaitan, KPIT Technologies, Jubilant Foodworks, Britannia, all hitting new highs today. So there's plenty of opportunities in the market. Of course, Infosys and TCS continue to be the big movers at the moment, up about 1.5%.
Just one more stock that we haven't spoken about, although the numbers came in, Sudarshan Chemicals. I mean, just pull up that stock. It's up, what, 9% today. Had a good run, actually, this month as well. Pull up a 1 month or a 1 year of that stock. It was about 300 rupees some time back. Now, almost touching 500. It fell rather sharply from that 600-point mark. But looks like, the numbers have really kind of excited the market. The fourth quarter revenue growth is 29% compared to an annual revenue growth of just 8%. So it's really fired up in the fourth quarter, and that's got the market excited. It had touched a high of 550, 600 earlier this month. I think April was one of its best moments. But Sudarshan Chemicals, excellent numbers. The fourth quarter, the full year will look like 8%. The fourth quarter numbers are excellent. Okay, that's one chemical stock that we will analyze later on, maybe on Midcap Radar. But let's analyze that spirited stock, United Spirits, one of the biggest gainers. Sonal is back with us to tell us the key highlights of United Spirits numbers and any brokerage comment that she may have come across. Sonal?
Well, you know, Lata, the stock is really cheering in trade today, and I think it is the volume growth which the street likes. In terms of revenue, we saw growth of around 7%. That was mainly driven by the higher volume growth and also because of the price hikes that the company had taken last quarter. In terms of margins, it is a miss in terms of a YOY performance and also in comparison to a poll that went down by around 30 basis points at 12.6%. Even profits, they went up by around 13% at 211 crores. But the segmental performance, that is what has actually cheered the stock today. In the prestige and above segment, where 60% of the revenues come from, the reported sales growth went up by around 16% and the volumes, they went up by around 15%. This is despite the fact that the management told us that route to market changes will be applicable to the company this quarter as well. Popular segment saw a volume decline of around 13%, but that is on expected lines because this is a particular segment where they had taken this segmental change. In terms of other highlights, the management continues to remain very optimistic about company's performance. Management has guided for a double-digit top-line growth and also expect that the margins will be able to improve the margins in that mid to high teens growth. Also, they think that the price hike has helped the gross margins this time around by around 500 basis points, and they say that they will continue to see this growth in margins going forth. Also, they've been able to reduce the debt by around 800 crores for this full year, and the current debt stands at around 30 to 165 crore rupees. They have a con call at 12 today. I will listen to it and give you all the highlights.
Okay, thanks a lot for that. In fact, talking about conference calls, even Cummins India has a conference call slated at 11 later in the morning, in about half an hour from now. Cummins, remember, has reported weakness as far as its domestic revenues are concerned, and that's why the stock is down about 1.5%. So let's see what the management says over there. By the way, a lot of stocks are also extending their losses right now. Camlin Fine is the stock that I'm looking at. It's down almost about 12.5% and big volumes over there.